Yeah.
So now your interest rates have gone up as your tenant base has gone way down. So
Yeah.
this is going to be a crisis again. We're very bullish on gold. Gold could hit $3,000 an ounce this year.
Yeah.
And here's the reality. The people on the street, on Main Street, they're suffering. Again, the data. In America, 63% of the people are living paycheck to paycheck.
Yeah.
So they know how bad it is. The inflation's killing people.
Gerald Celente, the well-known trend forecaster and publisher of the Trends Journal magazine, is optimistic about gold's potential, predicting it could reach $3,000 an ounce this year. This bullish outlook stems from the widespread economic distress felt on Main Street, where many Americans are grappling with inflation and living paycheck to paycheck. Gold regained some ground on Monday, recovering from its most significant daily drop in 3.5 years during the last session. Investors eagerly await U.S. inflation data and the Federal Reserve's decision on interest rates this week. The upcoming statement from Federal Reserve officials may indicate meaningful progress on inflation this year, potentially setting the stage for eventual interest rate cuts. Celente highlights that current interest rates have risen significantly compared to the past. This increase and decreased tenant occupancy rates create potential instability in the real estate market. A critical concern is the sentence the Fed added to its statement after its last meeting on May 1st. There has been a lack of further progress in bringing inflation back to the central bank's 2% target. Inflation remained uncomfortably high in the first 3 months of this year, tempering hopes that it would continue to cool as it had in the second half of last year. Economic analyst Francis adds to the discussion that high interest rates are currently propping up the dollar. However, with global recessionary trends, such as those observed in Chile and Germany, the U.S. is anticipated to lower interest rates eventually. Historically, lower interest rates have driven gold prices higher, supporting Celente's optimistic forecast. Join us as we delve into Gerald Celente's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
People aren't going back to work. There's going to be a bust that's unbelievable. And again, they're not convertible. And they're going to, and you mentioned before about interest rates. These are interest rate loans. The interest rates were half of what they were, compared to what they are now.
Yeah.
So now your interest rates have gone up as your tenant base has gone way down. So
Yeah.
this is going to be a crisis again. We're very bullish on gold. Gold could hit $3,000 an ounce this year.
Yeah.
And here's the reality. The people on the street, on Main Street, they're suffering. Again, the data. In America, 63% of the people are living paycheck to paycheck. So they know how bad it is. The inflation's killing people. So they realize how bad it is, and they feel the pain when the markets go down. When
Yeah.
the markets crash, that's when the street wakes up to the reality. So does the United States want to have high interest rates when they have to pay all this dough on their debt? No. The dollar is only strong because, again, of high interest rates. And I believe they're going to lower interest rates because every country, Chile is announced they're in a recession now. You know, it's one after another. Germany is always on. It's been on the verge of recession, in and out since 2019. And this is the third largest economy in the world. Look what's going on in Japan. This fourth largest economy. They used to be the third. They're going to lower interest rates. That's our take. And the lower interest rates go, the higher gold prices go. It's as simple as that.
But I would even argue you don't need the low interest rates now. We've reached such a loss of confidence in debt because of that risk premium aspect that the failure of debt is the turbo juice of gold. So even with escalating rates, gold can and probably will go up. I'm just not sure who's going to buy all the debt, because the minute we cut a rate, we're saying the market's going to accept a higher valuation for treasuries again. And we're on the seesaw. There's the currency and the debt. They both have to go down. But if we're softening the dollar, we're actually requiring a bid on the debt. If it doesn't come, the market goes very, very liquid and holds its value because nobody is panic selling.
Gerald Celente, a noted trend forecaster, warns that $4 trillion in U.S. commercial real estate debt will come due over the next 2.5 years. The inability to refinance or pay off this debt could lead to massive failures, severely straining the banking sector. Moody's Ratings has indicated that at least 6 U.S. regional banks with significant exposure to commercial real estate loans are at risk of having their debt ratings downgraded. The banks under review include First Merchants Corporation, FNB Corporation, Fulton Financial Corporation, Old National Bancorp, PPAC Gladstone Financial Corporation, and WAFD. This potential downgrade highlights the vulnerability within the banking system tied to commercial real estate. Celente urges individuals to prepare for an economic downturn, emphasizing that the signs of trouble are clear and that proactive measures are essential to mitigate the impacts of a looming financial collapse. According to Statista, the probability that the United States will fall into another economic recession by March 2025 is 58.31%. This forecast remains unchanged from the previous month, but is slightly lower than the 61.47% projection in January 2025. Let's get back to the interview.
In the next 2.5 years, $4 trillion in the United States of commercial real estate debt is coming due. There's going to be massive failures, and banks are going to go bust. Let's go back a little over a year ago. 3 banks failed in the United States: the Silicon Conman Valley Bank, Signature Bank, and First Republic. Boop, gold prices shot up, the market shot down. That was 3 banks.
Yeah.
That was 3 banks. And how many did you say are in trouble right now?
Oh, mid-60s. Yeah.
You know what the numbers that I've seen?
And that's an undershoot.
Almost 300. No one is talking about the massive failures and how this is going to crash the banking system. It's going to be the worst collapse in modern history. This is going to make the crash of 29 look good. Again, the numbers are right there. No one will look at them. They will not report it because they're prostitutes. They're media whores that get paid to put out by their corporate pimps and government hellmasters. And number 2, they don't teach trend tracking. They don't teach it at Harvard. They don't teach it at Yale. They don't teach it at Cambridge, Oxford, Princeton, nowhere. You know why? They don't know how to do it. Let's wait until December. And this will be the news. What happened last year? Here are the big things. What the hell do I care what happened last year? What's going to happen next year? We don't know. So what we're telling the people is you better prepare for this. And again, here, this is from the Trends Journal. This is part of our economic update. The magazine just went out yesterday. Barely reported in the U.S. media is the decline in the U.S. manufacturing, which was down in May for the 18th time over the last 19 months. And then we go on showing how bad it is. And then we go, banks go bust, cover up. Not a peep from the prostitutes about the coming bank implosion as the office building bust brings them down. Again, to illustrate the danger ahead, Hindenburg Research just published this report about Axos Bank. This is AXOS. Here's what they write. Contrary to many peers who backed away from deteriorating commercial real estate market post-COVID pandemic, Axos doubled down, increasing its total exposure from $5.5 billion to $9.9 billion in March of 2024. Now 53% of Axos' total loan book is exposed to these segments. The industry has begun to plummet. Distressed U.S. commercial properties rose to $57 billion in 2022 to $86 billion in 2023. $2.2 trillion in commercial mortgages are set to mature. Again, it keeps going on. No one is talking about this. Who the hell heard of Hindenburg Research? Nobody.
I like the name.
You know what I'm saying? Except the people that really know about this stuff.
Given the multifaceted economic challenges, from the potential surge in gold prices due to inflation and interest rate dynamics to the looming commercial real estate debt crisis and its implications for the banking sector, how can individuals and businesses best prepare for the predicted economic downturn? Share your perspective in the comments section. If the video resonates with you, Join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.